Hey y'all, how's it going? YouTube, Robert Williams here on Instagram, The Emotional Trader. Go ahead and follow me on my Instagram page or subscribe and like the video if you're going to like the content that we're going to share today. And it's been a minute since I've been able to make a new video. And it's actually been a minute since I've been able to look at the market. As some of you know, I am married, 5 kids, and it can get pretty busy. But wanted to hop on here and just take a look at some S&P 500 stocks and throw some lines on there or just see what we see out here, right? Not professing to be a professional or anything like that. Like I know uh, how it's supposed to go or should go, but I like going about and learning together and just making these videos really for my kids, for them to see in the future. If they decide to pick up the mantle and invest the money that they will be able to inherit and grow their generational wealth to many more generations to come, right? I'm looking forward to providing for my children's children, but yet there needs to be a place to start. And there needs to be some education that's left for them, right? And sometimes as technology is advancing, those don't want to pick up books or they don't want to read anything. And on top of that, I get a cramp by writing or typing a lot. So if we do some videos, then maybe they'll watch it. You can fast forward it. And you can also speed the replay, right? 1.25 times, 1.5 times, depending on how fast you talk. And you can get the knowledge by watching videos. So thanks to technology. But nonetheless, let's get into the charts, really. You guys know my favorite platform, Thinkorswim. So let's throw this over here on the Thinkorswim so you can see that bad boy. Right now I got WWE on, and I think I have WWE on because I was working with my financial discipleship group on the Friday night and we pulled up WWE. But let's go ahead and pull up the S&P 500, the SPIX on the index, and let's see what we got going on. This is interesting because I have no lines on here. But as you guys can see, this is my, there they go. Oh, Fibonacci's. Yes, I was doing some Fibonacci's with the financial discipleship group, and we were talking about different fib levels and stuff like that. That was a good video. Sorry, that's only for them that I recorded that video, but maybe in the future I'll take a snippet out of that one. But let's go ahead and remove that drawing. Let's go ahead and remove this drawing. And this right now is my no EMA filter, right? And I know me and my filter. See, oh wow, it's been such a minute that I'm even using the wrong verbiage. This is my no EMA study. As you guys know who do follow me, or what I like to utilize is all these lines, all these EMA lines, right? We're looking at a 2-year, 1 day, and I like to use the 5, the 10, the 20, the 50, and the 100, and the 200 simple moving average. I know it looks busy, but as time progresses, you then get to understand what these lines are. And this is so easy for me to read at this point. And it just takes time to get used to these lines being here so you can see what's significant and what's not. And what we have on these EMAs that I have here, again, the gray is the 5, the green is the 10, the blue is the 20, red is the 50, and this dotted line here, that's the 100 simple, and then this purple one is the 200 simple. And you know what, instead of looking at charts, I guess I could kind of explain why I like to utilize these moving averages here. And it's part of what I've learned in trading with Tradeway, which is a Christian educational company that teaches those how to trade stocks with Christian values, and creating the generational wealth and showing you how to trade like a business, right? And I've taken a mixture of some of their teachings, of some of the folks who are more swing traders, right? They do things on a few months type of time frame. And then there's a elite group that we call the Top Gun Elite Group. And they, the teaching from that gentleman, Mr. Jeffrey Nancy, teaches it to where you're doing faster, even weekly trades. And when you are able to anticipate where the market's doing. We focus a lot on taking a look at the S&P 500, getting a good idea and metric of the market. And he likes to utilize the 5 EMA because that shows to him how much momentum there is in the market. So the reason why the 5 EMA is on there is because if you want to be a faster trader with faster entries, right? And obviously you're taking a little bit more risk, but when you want to be a faster trader, seeing and getting in early and being able to ride some fast momentum, you would utilize the 5 EMA. And the reason I would say that is let's kind of scan here in on this section here. By the way, this green line is just this is the S&P comparison. So I have that up there when I'm doing other lines as well. Wow, sneezed. Okay. Sorry for that break, but I had to sneeze. And maybe you caught some of that on camera. That looked ugly. So, but if we take a look at here, this is pretty much what, mid-March. We got mid-March to present time. I'll scan out a little bit. Let's go to January. So we have the S&P 500 obviously bouncing off the 50, bouncing again off the 50, made a lower high, broke a little bit below the 50, came close to the 100 simple moving average, bounced up and created a new high. Then we had the bounce off the 50 again, and then it kind of pretty much just exploded from there, creating a nice new high, going up to almost 4,200. And so as you can see from at least this time frame, January, mid-January to now, you can see that the S&P 500 has liked the 50 moving average as its support to bounce up off of on this particular uptrend here, right? And we can call it an uptrend because if we put some trending lines here from say a long-term perspective, you have a significant uptrend there, right? If you wanted to do something of more recent lows, there's your uptrend there. Or if you kind of touch the bottom of that one, you'd slice through here. I don't ideally like it, but as you can see, it's going up and to the right, right? That's all that really matters here in this picture. So let me remove those lines. But the reason why I utilize the moving averages is because they act as areas where you can find a bounce, especially on an uptrend, and it would also be inversely on a downtrend. So let's remove, what I'm going to do real quick to be able to explain it is I'm going to remove a few of them. So I'm going to the studies, and let's go ahead and we're going to remove the 5. We're going to remove the 10, and we're going to keep the 20 and the 50 and the hundreds as well, because they're so far down there. So we're going to apply that. Don't worry, it's not going to get lost. All right. So the 20 and the 50 EMA are very popular moving averages. And so if you were to only have the 20 and the 50 moving average on EMA on your chart here, you would pretty much be able to see that the 50 is the area that it still likes to bounce off of, right? It acts as that support. You get the bounce, pretty much the bounce in the zone here, you get the bounce and it moves up. You also have the 20 where you can utilize that as a gauge of its momentum as well. Because if it bounces off the 20, then you can say that it's even super hot, right? Or it's hotter of its uptrend and more bullish when it bounces off the 20. But in this particular case, we really don't get bounces off the 20, but we do get areas of pause at the 20. For example, this area here was an area of pause when it came back down. It kind of held here. But then the next day, it obviously gapped low, went down to the 15, came up, and it kind of rode along that line there. Right here, you had a doji at the 20 moving average. And it stayed as a pause area, right? Because it was in that zone for a few days. But then ultimately, the wick hit down on the 50 EMA, and then that's where it bounced back up, okay? But again, the 20 and the 50 are very popular moving averages. And the way that Tradeway kind of shared and explained it by a gentleman by the name of Ross Query. I love the way that he gave this analogy. He said that you can treat the 50 EMA like uh, concrete, like a concrete foundation, right? Essentially, or like a brick wall. Because he talks about if you were to throw a baseball or something really sharp and you were to throw it at a wall, on a brick wall, typically it's not going to go through. And he treated the 20 EMA as if it was drywall, meaning that, if you throw a baseball at a drywall, which is typically in our home, you can most likely break through that depending on the speed of that baseball that you're throwing. Another good example is like saying if you had a firearm and you shot a bullet at a concrete wall or a brick wall, I don't think it's going to go through. It has enough density in it to stop it, right? But and then it's a bullet's definitely going to go through drywall, right? So when he talked about those analogies in a sense of the 20 EMA being like drywall and the 50 EMA being like a concrete or brick wall foundation, he's saying in a sense that when you have that uptrend and it comes down, when the stock's coming down off that high point that it created, like a basketball bouncing, it can break through that drywall with enough momentum, enough speed, right? Speed and momentum being like the volume. The volume's high because a lot of people are selling. It can break through that, right? But typically when it gets to the brick wall or the concrete, it's going to bounce off of that. So that's what you have here in seeing this picture of the 50, and it bounces off of that lovely support, that very strong brick concrete support level. And then it bounces back through. And again, it comes back and it breaks through that it go ahead and it breaks through that drywall again, right? With enough conviction, enough speed, enough momentum. But then it comes to the brick and it hits that and it bounces up off of it. Now, when you have points of where it does break through that 50 EMA, that brick or concrete wall, typically it's going to come down to either a horizontal level support that we could see we had back here on the uptrend, right? Around the 37.22 area, or it can come down close and in the range of the 100 simple moving average. So look, if the 50 is like brick or concrete, then the 100 simple moving average, I like to say it's like bedrock, right? When you're building a tall skyscraper and you're drilling down, you got to go down deep into the bedrock, right? So that you can put your pillar posts that you're building your foundation on that bedrock. And it should definitely bounce off of that point, right? Typically, well, not typically, majority of the time, that's what you're going to get. It should bounce off that 100 simple moving average because that's bedrock. Now, if it breaks through that, then that's almost like a atomic bomb momentum type of torpedo speed or something of that nature, right? But typically, you won't see it break when it's on a healthy uptrend. Typically won't see it break on its through its 50. And if it does, the next target area where you'll have that super strong support, if it breaks any of these horizontal levels, is the 100 simple moving average. That would be like your bedrock of support on an uptrend. So if you just had these two, if you just had the 50 and the 20 EMA, utilizing that for your momentum for your uptrend trades, you'll be pretty good starting off, right? And then you throw some 100 simple moving averages and 200 simple moving average on there too. So you're saying, now that I mentioned the 200, you're probably saying to yourself, oh, well, what is that? Well, I would like to say that's like the core. That's the Earth's core. When it gets to that point, it better be bouncing up off of that. And if it's not, then we definitely got some problems. And we're most likely already in some significant correction or maybe even bear market territory. For example, let's say if we were here and this thing was going to go all the way down to the 200 moving average, that's a 12% correction. So right there, you're in a 12% correction if we were at this point, right? Down to the 100 is about a 6 to 7% correction. Down to the 50 EMA, that's about 3.7%. of a pullback, which is just pretty much a healthy pullback, right? And but if it went down here, then and it breaks here, oh man, it's like all hell's breaking loose, right? I might as well open up the floodgates. So 50 is like your concrete, your brick wall. 20 is like drywall. 100 simple moving average, that's like bedrock. 200 simple moving average, that's like the Earth's core, right? When it breaks through that, we got a problem. Hence, if we go all the way back to pandemic, March, COVID-19, we had a problem, right? That thing just ripped right through that. And if you weren't selling there, I don't know what you were doing, because you didn't know where it was going to go, especially after it broke so heavy. And this again is the S&P 500, and a lot of other stocks followed. So let's go back to where we are today, right? So where do my other moving averages come into play? Well, my 10 moving average comes into play again as an aspect of momentum. And the easiest way to kind of do this is to come off of there and go back on there. And now my lines are back there. So now my green line is my 10 moving average. Oops, no, I didn't mean to do that. My bad, ladies and gentlemen. Let's click on that. Let's remove the 5, apply. Let's get back here. All right, so now we have the 10 moving average on here. And this is just another area to show if the momentum of this particular, of the S&P 500 as you're looking at the chart. And the 10 EMA kind of in any of these cases really didn't come into play, but it did here, right? Another area of pause from the momentum. So you had the up move of the momentum coming from the 50. And then you would say to yourself, maybe you say, all right, I'll trade it when it comes back to the 10 EMA or it comes back to the 50. But as it just keeps moving away, you're wondering like, well, what is the thing that's keeping it up there, right? When will it ever pull back down? What is it riding? Sometimes it could be riding the 10 EMA, or when it starts to come back down and it pauses for a little bit, like here, it paused at the 10 EMA. And you have the 10 and the 20 kind of cross and do its thing together here. And you have it pausing at that 10 and 20 EMA section again. And then finally it bounces off the 50, breaks above the 10, the 20 and the 10, and it does like a little flag pop up on this candlestick, pulls back to the 10, and then it just goes for its run. And where are we sitting at right now? Where it's been utilizing kind of the 10 EMA as support. So if the 50 is your concrete and brick, we won't talk about the 100 or 200, and your 20 is like drywall. Well, what is your 10? Your 10 is like paper, okay? Obviously, if you throw a baseball, shoot a bullet through that paper, it's easily going to get a rip, right? You can poke your finger at paper and it could break through. So that means that when it pulls back, it can easily pull back and break through that 10 EMA. And what you'd be looking for is hopefully to definitely get some support at the 20, if that momentum downward is not too heavy or strong. But you're definitely looking to get some of that support at the 50, because that's your bedrock, not your bedrock. That is your concrete and your brick wall, where that ball should easily bounce off of, or where that bullet stops and then it starts to go in another direction, right? So, but the 10 EMA also too allows you to see the momentum, because some stocks really like to ride the 10 EMA. So there's lines with the EMAs too. You have points where you say, okay, it bounces off the 50, but it rides the 20, or it bounces off the 50, but it rides the 10, right? We could take a look at some stocks like that in future videos. And if I have enough time, if this is not long, I'll take a look at a few stocks too. So that's the 10 EMA. That's why I like to have it on there as well. But again, when you add some of these smaller time frame EMAs, this just allows you to get into the trade a little bit quicker, right? Because maybe if you want to get in because you feel like this thing is so hot, I'm going to get in and watch it bounce off the 10 and make my move here, then, go ahead, by all means do that, as long as it's a part of your plan and you're utilizing the 10 as your momentum trading EMA. And the last one that I like to have on here is the 5 EMA, and that's this gray line that you see here. Okay, so if the 50 is concrete, brick, 20 is drywall, 10 is paper, what is the 5? I don't know, is it like spider web or something? I don't even know. Like a bubble? I don't know. What is the 5? Because see, Ross didn't have an analogy for the 5 EMA. So I actually really don't know what it is. We can probably consider it to just be air at that point. But the reason why Jeffrey Nance likes the 5 EMA is because it lets you know how strong the momentum is. Okay. And that is to see too how strong the momentum is and if the stock is really, really hot, because the stock can be hot and utilizing the 5 EMA as its support as it just runs up. And that's what you see here in this zone. So for the beginning of February to in the first few days, it bounces off the 5, it breaks above the 20 and the 10, and it just rides that 11 and even pulls away from it some. But here it even, it not rides the 11, rides the 5. Rides the 5, gaps up some, so it's pulled away a little bit, but it's riding the 5, and then it can obviously easily break through the 5 and down to the 10 to treat that as support. And then if it doesn't stop at the 10, it comes to the 20. And obviously if it doesn't stop at the 20, come down to the 50. And then of course, if it doesn't stop at the 50, then it can come down to the 100. And it did that really quickly and quickly recovered. But here's these 2 points here, right, of where it rides the 5. And then the best picture of it is here recently from March 25th, or you could say March 30th. It's just been riding the 5 EMA. So this means that the market is hot. It's hot right now. And once it broke and created that new high, it said, all right, we're just going to keep on going. We're riding this 5 EMA because this market is hot right now. We're creating new highs. And then we recently broke below it, and now it's trying to see if the 10 EMA is going to act as our uptrend support for the past 4 days. And it looks like it's doing a pretty darn good job. So when you have the 5 EMA in that sense where it's riding it, because if you didn't have that line on there, right, some people would say to themselves, I'm going to remove the 5, dang it, why did I do the widget again? I'm going to remove the 5 EMA. And when you see that it's like, it's floating away from this 10 EMA, you're like, what is it on? Where is it going? Like, why is it not pulling back? Why doesn't it just ride along the 10? Where is it at? Like, what is it doing? Well, when we put our 5 EMA on there, that line was right on there. And so it showed you what it was doing. The market was hot and it was riding the 5 exponential moving average and it was doing its thing. That's what it was doing. And you had to wait until it came back to the 10. And let's say you were hot to try and you wanted to get into the market because you saw that it was making new highs and you're like, this thing is going. If you said, I'm gonna wait until it comes back to the 10, you would have missed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, missed 13 days of a move that was from that point to there, a 6% move over 13, 14 bars, right, of movement on the S&P. That's a pretty good move over the course of 2 weeks. And if you were trading options on it, that could have been an even better move, right? Let's say you're trading the SPY, because once you throw on the SPY, you pretty much get the same thing of the ETF version of the S&P. I have Fibonacci's on here too. Yeah, we had a good time with Fibonacci's actually. That's why. I'm going to remove that drawing. Okay. So let's look at that here, right? Same time frame. 50 comes into play. 50, right? I mean, the SPY is pretty much the S&P 500 ETF, so it's going to look exactly the same. But let's say you were trading options on here, you missed this move, right? But then when you throw on your 5 EMA, you could see that it was pretty much riding riding that. So if you wanted to be aggressive again, and you wanted to get in early, or you wanted to you know, take that risk, you could have entered in at these moments of it riding this 5. And then you could have still made some money because you said, okay, it's riding the 5, it's got some good momentum. Once it breaks the 5, I'll exit. And if that's a part of your trading plan, then you would have exited probably on the 19th or definitely on the 20th. But if you played it from here to here, you would have had that would have been a 4% move. That's a pretty good return if you're playing a 1 month option or a 2 month option or even a 3 month. Right. So take it for what you want, right? That is the proof is in the pudding of the chart here. So the reason why I do like the 5, 10, 20, 50 EMA with the 100 and 200 on there is so I can gauge that on uptrends. And I like to see, particularly for me, I like to see a stock to bounce off of the 50 EMA, stock or an ETF to bounce off the 50 EMA as an area of support and then break through the moving averages. And then that lets me know that we are making our way back in our uptrending pattern. So like areas like this of when the 50 acted as support, seeing this on this candle and then the following day is a nice entry signal for me. When it did this here, this would most likely would have been an entry signal for me because it came here and did this. I said, okay, cool. The 50 acted as support. Now, would I be wrong there? Yeah, I would be because it'll pull back. And if I bought time in my option, right? If I bought time 3 months out or 4 months out, I can probably stomach this move to see if it bounces off the 100 and then continue to make its way up, which it obviously did. But if I didn't buy time, let's say I only was in it for a month, maybe this pullback really hurt the potential of that contract. But yeah, so I would like to see it bounce off the 50 on these EMA uptrends. And like when it comes and does this, bounces up, this is obviously nice, like a nice good signal to enter into a trade when it bounces off the 50. So the question is, does it work for other stocks? Let's take a look at a few. Let's pull up ADP, and I'm going to change the time frame here just to make the chart bigger to a 6 month. And let's see how ADP kind of reacted. And I don't know how long this video has gone on already. I think it's probably about 30 minutes. But let's see here. So where are our bounces? Obviously, it's been on an uptrend since the pullback at the beginning of the year. Let's see if we can draw a trend line on here. There's these lows up here. If you drew that trend line, kind of just tags all of that there. If you want to have no EMAs on there too, to draw your trend line so you can just get a clean look, that's an uptrend. Duplicate the line so you can create a trend channel. That's why I like Thinkorswim and these platforms that allow you to do that. I'm trying to connect some tops. Now, I wouldn't connect these tops here. That's kind of like, I mean, that's a small channel, but you have some significant tops of higher highs here. Kind of like that. You know, sometimes they're not perfect, but that looks like a pretty good channel. If it's coming here, bounce, going up, near it, up, down, boom, boom, boom. Now it's riding the support there. So now you have some trend lines on there without any EMAs. And let's take a look at throwing on my lines now. And it looks busier, of course. But what do we see? What do we see here? We see that it broke through those lines, came down, the 100 acted as support, and came up. We have some battleground area here. And this is where all the moving averages were pretty much just all together, right? So you really have, you're like, oh, which way is it going? I don't know which way is it going. Well, most important thing, let's not break the 100. That's the most important piece here. Let's not break the 100 moving average. But then finally it does kind of pretty much bounce there and kind of, I mean, look how that line that I drew, obviously from here to down here, comes into play with the 100 simple moving average. And then it breaks up, creates a higher high, higher low, higher high, pretty much a higher low, higher high, higher low, higher high, higher low, higher high, higher low, lower high, lower low. This may be breaking its trend, but then here we are now creating a higher high. I don't know where the higher low is at yet though. But so what is that from an EMA standpoint? Well, it bounced off the 100, broke up. Let's see where it pulls back to the 50. Goes up. Where does it pull back? To the 50. Goes up. Goes up, pulls back to the 10 this time. Goes up, pulls back still to the 10 area. Pulls up, comes back to the 10, pulls up, now it comes back to the 20, and now it's riding. It bounced off the 20, now it's riding the 5 and the 10 on definitely smaller moves on these days here. So this is ADP. I would say once it kind of corrected itself, this is how I would analyze this in this time frame here, not considering these back here. Once it did its pullback, and I don't think would I call that a correction? What is that? 10%? Yeah. So 11%. It had its, it had its correction. Didn't break the 100 simple moving average. But then pretty much it bounced off the 100, and it's been pretty much bounced off the 50. And then ever since then, pretty much has been bouncing off the 10 as its area of liking of support, because it bounced off the 10 there, bounced off the 10 zone there. And now this time it came back to the 20 and it's moving on its way up. So this one doesn't really have exactly, it's kind of changed where it's like to bounce or even like to ride upon. Because like I said, stocks like to bounce off particular EMAs and ride other ones. So this probably wouldn't be one I'd get into because it's a little bit different. It's not something that's consistent that I can see from the past. So let's go here on this list of S&P 500, just random different stocks. And I'm going to click on this one. What is this? RE. Everest. I try not to have anything prepared and coming for a video so that you can really see my facial expressions when I'm like, I don't know about this one. Let's see if we can kind of make some sense of here, right? So coming into the end of 2020, it had pretty much some sideways movement. This was areas of obvious resistance right here at the 240 level. So when it pulls back, it has about a 13% correction from the beginning of the year down to February 1st. Treated 200 as its support. Like, all right, so it fell apart or just broke down strong. I don't know what the news is. I don't even know what sector this company is. It's finance sector. Okay. So Everest Real Estate Group, I guess is what it is. And here's that core, that Earth's core that it didn't break through. Praise the Lord. And so it just began its pullback from here. And so let's see here. So once it breaks up above all this, if you were aggressive to say, all right, man, if you're following, if Everest was in your watch list that you were watching on a consistent basis, you would have probably saw that an opportunity to load the boat, right? You probably see that like, oh, great, it's been breaking down. I already have positions, and now this is even a better buy. Then up here, I'm going to add to my position or something. Or maybe you sold once it broke one of these lines, if that's what you're trading. And then you're like, all right, it's breaking my lines. I'm going to either capture some profit, or maybe you took a loss depending on where you entered. I don't know. But then once you see it come down here and find the 200 EMA as an area that it didn't break below. Well, it broke below, but it's a zone, right? It's not a finite line. I always talk about this. Your support and your resistance are zones. They're not finite lines, but you have 1, 2, 3, 4 days there on that 200 simple moving average. And you're like, this has got to be it. This is going to be my support area. And it bounces up. And if you were aggressive, you get in there. Good buy point. Because if you got there and now you're here, You're on 25% move to the upside over the course of 2 months, 2.5 months. Nice. What is that? That's what price? What is this price right here? It's 212 to 266. I'm gonna be freaking happy. All right. So after it breaks up above, though, what does it like to bounce off of? Now is the question on this uptrend. Here's this is the steeper uptrend, but you don't really get good lines off of that. Where do you get good lines off of? Kind of right here. It's not, and that's not even the best, I'll be honest with you. Like there. Duplicate the drawing. Can we find some tops here? Oh, we're at some tops. I like that now. I'm not following Everest, but I probably, if it was back down here, I would maybe. I don't know. So let's see what we got here. Oh, and it has earnings coming up too. Hopefully it does well. Let's see. So considering these lines, so now we see a trend here. We see this trend where the uptrend pull. Once it's at support, typically what does it do when it hits support? Hit support, hit support, pulls back some. It could be a sideways pullback or it can be a steep jab back, right? But now that it's at a support area, maybe we'd see a pullback down into this area here, this zone of 257 where you had some old resistance becoming new support. I talk about that in other videos, but everybody talks about that because that's just like the facts. I'm going to remove these trend lines here because I want to talk about EMAs more so. But what does Everest like to bounce off of? So kind of after it broke up above that 200 and it created a new high, where did it pull back to? Looks like it pulled back to the 20 and came up again, pulled back to the 20. Some kind of erratic candles here that we have. And came up, created a new high, pulled back to the 20, paused for a second, dipped down to the 50, but now it's back here, came up, hit the resistance of that 256, pulled back to the 20, and then now it did its thing again. So I would say as of lately, it likes the 20 EMA as the EMA to bounce off of, but it likes to ride the 10. So look at all those candles riding all along that 10. Then it breaks it because you can break through the paper. You get down to the drywall. If you have enough momentum being, look at that big bearish engulfing candle, high volume, breaks through that drywall, goes to the concrete, finds some support, pulls back up, and now it comes down to the drywall again. But this time, right, not that much volume on that. And then it just makes its way after bouncing off the 20 there. That's how I see that one. Random again, closing my eyes, clicking there. What do we have? NI. This looks horrible. I would not trade it. What is this? Utilities? I'm cool. But you can see it's riding the 5. Look at that momentum. It's riding the 5 and the 10. It's riding the 5 and the 10. I don't know what this is, but it's riding the 5 and the 10 as of the last, ever since, I would say ever since here. I mean, it was riding the 5 there, but ever since like the end of March, look at that. That's just pretty consistent there. If you are following that, then you know what to do. I wouldn't know what to do with that one. Let's pick another one. Not looking. C, Citigroup. Why am I hitting all these financials? All right. This is kind of pretty clear though. Even going back, coming to the end of the year, what is it riding? It's riding that after some tumultuous end of the year numbers. It's riding that 5. It's just riding it. Now, I'm not saying that that's super hot. Citibank probably wasn't super hot, but it was riding that 5, fitting at 10, gets to the 20, pops up, pulls back to the 50. You got your brick and concrete, bounces off of that. And then it's just been riding now the 5 and a little bit of pullback to the 10. And we come back to the 20. And then you had some sideways movement. Now we're down at the 50. And it seems to be finding some support right there at the 50. So if Citigroup is yours or you like it, what would you say to yourself? Okay, I'd probably say It bounced off the 50 back here, and it rode the 10 and the 20 up to create new highs. We had a pullback. Maybe we felt like we would get some support. The momentum didn't seem too high, but the 20 kind of held, that zone area held. You had sideways movement. So that's probably a little bit of weakness there. Pulls down to the 50. Now you're saying to yourself, okay, we're at that concrete, at that brick wall where this should be a strong area of support. So there's obviously news things that you can keep in mind here with financials, the rates, the market, Feds, all that good jazz and stuff, right? And you could say to yourself, well, based off what I see back here, that acted as an area of support. So maybe you need to see a confirming candlestick to the upside, which would gauge for you to say to yourself, all right, I can enter in this at least for it to test its previous high. So you can get yourself, what's that? A 7% move, $5.5, $6 move from where it's at. Where are we at? We at 71.38. Oh, sorry, let me draw it from the top. So there to the previous high is about a 6% move, $4.54. Depending on the type of trade that you're doing, if you're doing short term, a month contract maybe or something like that on an option, maybe you're even just, you have large volumes of some capital that you'd like to play for a $4.50 move. That's your next potential resistance. And if you think that, financials and Citibank's going to be doing well, had its earnings. Was earnings good? Let's see. Stop clicking. Thank you. All right. We're good. Earnings. Let's see here. Earnings estimate. Oh yeah. Well, hold on. I'm sorry. Banks did. All banks had good numbers this past week. But of course, you can have good numbers, get a pullback, resets itself. Big boys can get back in at a discount or a cheaper price, move that thing right back on up. Because obviously Citibank made some money. They were estimated earnings of $2.5, and they were at 3.6. So they did $1 better than the Wall Street expectation. Come on now. Can you say sandbagging? I can say sandbagging. I was in banking. I'm in banking. Sandbagging. It's a way to make your numbers for the future look better. So look at even like back here in January. It did really good on its earnings, pulled back to the 50. And it looks like that the next, like right after giving its dividend, it made its run. So maybe, maybe wait until after it gives the dividend and see if it runs. But if it pops up above here, look, that's a pretty good long-term trend right there. Duplicate that line. Pull it up here to these tops. Man, look at that high right there and that high right there kind of come into play, man. That's pretty much, if it, just what happens when we do videos. I don't plan stuff. You just have things that look like this. That is at support. It's a support of an uptrend, and it's at a support of an EMA. That's like two good confirming factors of an entry play. If I were me and I was trading Citibank, I guess that's what I would do. Probably should paper trade that. Oh, I should paper trade it. All right, I'm gonna paper trade that. I'm in my real account here, so I can't put it on, but probably paper trade that and see what it does. But my expectation would for it to just go to its previous high at least, and then. But obviously, if you're on the uptrend, you see where the stock can go. It can go even higher up there, which I can't go to right now. Take it manual. How do you make that? Oh yeah, that's what you do. How do you? Dang, you know what? I don't really do that. So, I don't like how that looks. That looks horrible. Well, take it back to auto. There you go. All right, so look, the video is definitely a lot longer than I had already anticipated just coming back, but just only having conversation, looking at some stocks and things of that nature. And Obviously, we talked about EMAs today. If you have any questions, please let me know. I'm just here to just pour out my heart or just have my kids listen in the future and get an idea of how they can, further their education. There's plenty of books, there's plenty of resources out there. I'm just on here to have fun and talk about stocks and talk and look at the technical charts and some things. So, look, until next time, I want you to continue to think, live, and be unstoppable. Peace. Follow, like, Instagram, The Emotional Trader, because this is an emotional game that we're in. Deuces.